The retail apocalypse in 2019 is continuing. We hear almost daily about U.S. retail store chains filing for bankruptcy protection and retail store closings. We are seeing stores close more often than stores are being opened. We are talking about brick-and-mortar stores. Is it strictly because of Amazon and other online sellers? We will discuss that in a bit. Victoria's Secret's parent company, L Brands, in its most recent earnings report announced that they would be closing 53 stores this year. That follows up from 30 in 2018. Victoria's Secret has been accused of not fitting into the #MeToo era and not adapting to change. Critics say that the runway show is outdated and that the images in stores are inappropriate. Other brands like American Eagle's Eerie are launching more body-positive campaigns. They also said that they would never use airbrushed photos. So while Eerie has had explosive success over the last few years, Victoria's Secret slowly has seen its sales slide. In the most recent runway show, which took place in November, Victoria's Secret came under fire. Before the runway show aired publicly, Ed Rozek, the chief marketing officer, was interviewed by Vogue. He made some controversial comments about plus-size and transsexual models being featured in the show, or rather not being featured in the show. This caused a big outrage online and consequently, whether or not it's a result of this, their ratings. The viewership ratings actually fell this year versus the year before. So increasingly, new brands are cropping up. People are seeing that more body-positive brands like American Eagle's Eerie are achieving a lot of success. So new brands like Third Love, Lively and Rihanna even has her own line of lingerie. They are trying to fill the void that Victoria's Secret has created of creating more body-positive clothing by having extended sizes and more body-positive and inclusive marketing. Store closures are an attempt to deal with a more urgent problem, slipping sales. There has also been talk of quality concerns in Victoria's Secret's garments. It would appear that they have their work cut out for them. DallasNews.com reports that the arts and crafts retailer Michaels is closing 36 of their Ohio-based Peloton stores they purchased. They are citing it as consumer volatility. Chuck Rubin, CEO of Michaels, stated in January 2019 that they have seen more volatility in consumer shopping behavior than they initially expected. He also went on to say that Michaels is lowering its 2018 fourth quarter outlook for same-store sales and profit. Next up is Things Remembered. They have announced that they are going to be filing for Chapter 11 bankruptcy protection. As part of their reorganization plan, they will be closing most of their 400 stores and shopping malls. They will keep their strong-performing stores. Things Remembered sells customizable gifts including jewelry and decorative items. You can have engraved your personalized message on a necklace or other jewelry or item. They were founded 40 years ago. As recently as June 2018, Things Remembered had 450 stores open. That dwindled down to 400 stores and now the bankruptcy filing. Time will tell if they can really survive. Sears, Kmart, JCPenney, Macy's, Kohl's and Nordstrom have all announced store closures. The Motley Fool reports that over the past decade Nordstrom has closed an average of about 2 stores a year. So more department store closures is really not a new story. Last January, Kohl's announced 4 store closures. With all store closures, people lose their jobs. Kohl's stock has been falling because same-store sales growth slowed. It has also been reported that Kohl's is going to offer voluntary retirement programs to hourly associates who are age 55 years or older and who have at least 15 years of service. The Wall Street Journal reported that owners of retail buildings, including malls, are reducing rents now for some stores that are seeing struggling sales. This includes JCPenney and some of the Sears locations that are still open. They are doing that because they fear that there may not be other anchor stores that are going to be able to come in and replace them. MoneyWise.com reported that Target stores may be closing some stores. However, they have also announced new store openings. So with Target stores, it seems to be more of a rebalancing, shutting down underperforming locations. Lord & Taylor, owned by Hudson's Bay Company, announced certain store closures also. They reported that weak holiday sales led to the decision at the end of 2018. Lord & Taylor closed one of their more iconic locations on Fifth Avenue in New York City. Upscale accessories store Henri Bendel will be closing 1923 stores in 2019. That also includes their store on Fifth Avenue in New York. They have been in business for more than 100 years. Christopher & Banks sell women's and especially petite clothing. They say they are going to close between 30 and 40 of their over 400 stores. Gap and Banana Republic. A lot of clothing stores are on the chopping block. Between Gap and Banana Republic, there is going to be over 200 stores shutting down. Clothing retailer Chico's announced they will be closing 250 stores in the United States. The Gymboree bankruptcy resulted in the sale of certain assets, but not store locations. About 900 stores closed. The U.S. Fed reports that the consumer savings rate is at 6%. It has not been that low since about March 2013. The Fed also reported that American savings are dwindling combined with rising debt levels. There is a similar story in Canada. No doubt that online shopping, including Amazon, takes up a big chunk of who normally would have shopped at these brick-and-mortar retailers. But we know that low savings and high debt can't go on forever. You can't see savings continue to decline and debt continuing to increase. As I have previously written in many blogs, there has to hit a limit at some point, and that's called insolvency. Do you have too much debt? Are you having a problem making your month-to-month bill payments?